Good morning. I'm Lacey Shippey on the Rural Radio Network, and it's time to take a look at our midday livestock trade. Joining us is livestock market analyst Kyle Bumsted. Kyle, what are you seeing as major factors in today's trade?
Well, so far today, I'm seeing what someone called maybe a dead cat bounce here. It looks like some non-commercial buying, a little bit of maybe some bottom pickers here in this cattle complex. And the reason I say that is because our spreads are under a little bit of pressure here. October fats losing ground to Dece fats losing ground to Feb, and the Feb fats have just now gone par with April. So a little bit concerned here. We've seen the rally here early this morning, but I don't know if they're going to be able to hold it. Our high today so far has been 235.10 in this December live cattle contract. I would like to see us hold on to that 235 mark here on a closing basis. On the feeder cattle side of things here, we got September done off the books. That we sent that away here last Thursday, and we've got feeders up $1.27 here on that October contract. Now the feeder index today is going to be up a little over $2 here in the Merck updates it later. However, that daily number is dropping under 360, and I'm a little bit concerned about that. So if we start to see that daily number slip a little bit that goes into that average, that's where I could say we maybe are seeing a little bit of a dead cat bounce here again in the feeders. And case in point there, we're seeing October losing ground in November, November losing ground in January, and January is about par with the March right now. But once you get up past that January contract, we're losing a lot of volume and open interest. So it's very tough to say there's any commercial business being done at all as far as that goes. Now on the hog side of things here, we're seeing a little bit of bear spreading there as well too. That we may have seen a little bit too much of a run here, too fast in the hogs. However, the charts are still looking technically decent on the hog market. Now on the grain side of things here, just a little bit of mixed positioning here ahead of tomorrow's report.
Thank you, Kyle. That is Kyle Bumsted, livestock market analyst. And if you'd like to talk to him about the markets, call him at 308-708-7340. I'm Lacey Shippey. You're listening to the Rural Radio Network.
With this Grain IQ Minute, I'm Bryce Duskett. What are your options with options trading? Should you sell a put or buy a call, or buy a put and sell a call?
I always say that if you want to use a put, it's going to put a floor under your production and protect it against it going lower, which is what we're historically worried about as a farmer. Or if you want to buy a call, allows you to call in to you or be able to own it, and allows you to benefit if the market goes higher. But typically as a producer, you want to buy a put to protect your price.
Grain IQ is a grain marketing podcast designed just for you, the producer, to help you make better grain marketing decisions. Doug Simon is a commodity consultant with Trados.
With the futures market, there's always one seller and one buyer. And in an options market, for every call that's bought, there's also a call seller. And then for every put that's bought, there's also a put seller.
Grain IQ, the grain marketing podcast helping you be more profitable. Subscribe and listen on Spotify, Apple Podcasts, YouTube, or on the Rural Radio Podcast Hub.
Welcome back to the Rural Radio Network. I'm Lacey Shippey with a look at your markets. Harvest pressure is the main factor in today's market to open a week of dry and warm weather across the U.S. grain belt. The crop progress report is likely to show harvest lagging behind the 5-year average after some rains, but an open forecast should help that pace catch up within the next week or so. Corn and soybeans are lower this morning, though corn is trying to make its way back to even. The wheat markets have found some technical support this morning as traders wait for the USDA's quarterly grain stocks report coming out tomorrow. Ending stocks for corn are expected to be close to 1.34 billion bushels, and that is down from 1.76 billion bushels a year ago. Soybean ending stocks are expected to be close to 323 million bushels compared to 342 million bushels a year ago. December corn is down 1 1/4 at 420 3/4. March down 1 1/2 at 437 1/4. May down 1 1/2 at 446 1/2. November soybeans are down 3 1/2 at 1010 1/4. January down 3 3/4 at 1029 1/4. March down 3 1/2 at 1045 1/2. Chicago December wheat is up 3/4 at 520 1/2. March up 1/4 at 538 1/2. Kansas City December wheat is up 3 at 508 1/2. March up 2 3/4 at 529. October soybean meal up 130 at 270.10, and October bean oil down 28 at 49.32. October live cattle are down 67 at 231.12. December down 70 at 233.60. October feeders are down 60 at 356.40. November down 37 at 354.10. December lean hogs are up a nickel at 91.10. February up 35 at 92.52. And Class 3 milk for October up 24 cents at 17.03. You're listening to the Rural Radio Network.